Good morning, everybody. Happy Friday. It's August 9th, 5:26 a.m. Central Time. Grain markets are a little bit higher this morning. Matt Bennett is with us. Guys, let's start off with yesterday's sell-off in the row crop markets.
So the December 24 corn and November 24 the December 24 corn and November 24 soybean contracts posted fresh low closes on Thursday. Both markets were pressured by increased farmer sales of old crop bushels, ideas of big U.S. crops, and a lag in new crop export sales. Large money managers continue to hold near record net short positions in both markets. Traders noted that basis bids weakened across some areas of the Corn Belt as processors began to cover the remainder of their old crop needs.
Matt, is there a lot of what I'd call give up selling in the country? Just guys giving up on old crop bushels, got to make room, selling them, and that's why we're seeing some deterioration here.
I mean, I've got to think so. We're hearing that. It's interesting, though. I had a couple guys in South Dakota tell me this week that actually a couple of their ethanol plants were pushing bids. It's the only place I've heard that. But in my part of the world, we've seen some basis weakening. You know, a lot of what's going on, of course, is people got to make room. I mean, we've got some guys right here locally that come into my office every morning, and they were talking about, hey, we've got to get this bin cleaned out, that bin cleaned out, and it's that time of year. I mean, this is a freaking huge crop in this area, so everybody knows they're going to need the space. And I mean, I don't think that we're an anomaly here either.
So once the processor, whether it's ethanol producer, soybean processor, once they get their old crop needs totally covered, does basis just fall out of bed?
Most likely. I mean, I just don't think you're going to get that little push or drying deals that we typically get. I mean, there's just too much old corn still sitting around. I mean, maybe somebody's going to want some new corn. I don't know. If they do, I'd be taking it with both fists. But bottom line is basis is I just don't see any improvement in most places from this point until, I don't know, somewhere into harvest.
The funds continue to lean on this thing. The private groups estimate that funds were net short 325,000 contracts of corn at yesterday's close and about 180,000 contracts of soybeans. Let's get to the report.
So USDA will release its monthly crop production and WASDE report on Monday. Traders expect USDA to revise its corn and soybean yield projections higher amid strong ratings and mostly favorable weather. A downward revision in harvested acreage, however, is expected for both crops. The new crop U.S. corn carryout estimate is expected to be near unchanged compared to last month, while the soybean carryout projection is expected to rise.
So what you've got going here is an expectation for a higher corn yield, but at the same time, the trade expects harvested acreage to decline by about 470,000. That's based on the Reuters poll of analysts. So you're looking for a report with a bearish tone, I guess. Matt, what are your thoughts on the crop, on the report, what USDA is going to say on Monday?
Yeah, I mean, we felt like they're probably going to come down on acreage. I thought that June report, it sure looked a little rich to me on corn acres, just based on what we'd been seeing and hearing. We all know that there were issues, South Dakota, Minnesota, northwestern Iowa corridor, but those are going to come out of harvested acres. And so I think, maybe those all get addressed this week. I know they said that the FSA data was going to be incorporated maybe a month earlier. And so the net effect, in my opinion and in our opinion with ag market, is that, the yield is going to outpace any reduction in demand, and we should see overall production up somewhat. I don't think it's going to be up extravagantly. I just think it's going to be up.
Well, you know what USDA does? If they do increase the size of the crop, which is actually not what's expected for corn, they'll increase the size of the demand projection just to balance the balance sheets. That may not be real. Soybeans, you're looking for only a bump of half a bushel. If you had a guess based on these average trade guesses for the yield numbers, 182.1, 52.5, are these numbers too low?
I think 182.1 might be a little bit low. We're fairly close there on the beans. We came in at 183.2 and 52.7. So, I think my thing is the September report. If August continues good, weather benign, and you don't have any super hot spells here and enough moisture, I've got to think that September you could come in and go up 2 bushel, on soybeans. I don't think that they're going to go extravagantly higher. We all know beans are an August crop. I do think that the bean plant is there. It's put the pods odds on it's got the makings of a mammoth crop, but I don't know that they're going to go there just yet in August.
With regard to carryout estimates, the corn number for new crop, which is this is the amount of corn that's going to be left over at the end of August next year, about flat versus last month is the expectation. Soybeans, we may see an increase. Wheat, we may see a small increase.
U.S. corn export sales improved last week. Net corn sales exceeded pre-report expectations at 19 million bushels. The print was up noticeably from the previous week and up 32% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net soybean sales also exceeded pre-report expectations at 12 million bushels. The print was up 2% from the previous week and up 66% from the prior 4-week average. China was the largest soybean buyer for the week. Net wheat sales were near the lower end of expectations at 10 million bushels. The print was down 4% from the previous week and down 23% from the prior 4-week average. Taiwan was the largest wheat buyer for the week.
We're getting ready to wrap up the old crop marketing year for corn and soybeans. We're going to start focusing on new crop. The new crop book of corn sales, United States, is not very good. It's lackluster would be the word I would use to describe it. Soybeans were barely better than 2019, which was associated with the trade war. Chinese purchases of new crop U.S. soybeans are down 90% from the prior 3-year average. We really need China around. That being said, the new crop soybean sales number was actually pretty solid yesterday at 985,000. China was responsible for 400,000 of that. So a little bit of an uptick in business, but still way behind where we need to be. And this is a big deal because exports, first off, are projected to account for 42% of the demand base for U.S. soybeans next year. And China would typically be about 40% of that export base. So China in total is, close to 20% of the entire demand base for U.S. soybeans. That's why the lack of Chinese business is troubling.
Yeah, no doubt about it. I think overall, when you look at exports, the USDA has baked in a lot of exports as well. And so you look at those new crop balance sheets, and boy, in July, they were gracious to say the least to us. I say to us, to the farmer. I know people usually want to get awfully hard on the USDA about, cooking the books, so to speak. But if they cooked any books in July, it's putting too much demand in my opinion, just based on what we're seeing right now. I do know, and cheap prices typically lead to demand. We understand that, but at the same time, you got to look at the evidence, and the evidence right now points to, us having a bit of a struggle to get to what USDA has put as fairly lofty expectations. But yeah, we need China in the worst way. Even if China went in and basically bought all of Brazil's beans and everyone else had to come to us, it's not the end of the world, but we need China to some extent because they're the lion's share of world demand.
We post a YouTube video 5 days a week, and without failure, there's always somebody who comments that USDA is crooked, USDA is manipulating the markets. And let me be very clear about this. Given what we know today, USDA is drastically overstating demand for new crop U.S. soybeans by hundreds of millions of bushels at this point, which is not USDA manipulating the markets to the downside. If anything, they're telling you it's better than it actually is. So just beware of that.
CHS will soon be a part of South America's largest port. The cooperative is partnering with Rumo South America, a Brazilian railway company, to build a large grain terminal in the port of Santos in Sao Paulo, Brazil. The port will cost about $440 million and will have the capacity to handle up to 9 million metric tons of grain and 3.5 million metric tons of fertilizer. It's slated to be completed in approximately 2.5 years. The construction of the terminal highlights the continued expansion of Brazilian crops. Brazil has effectively increased its export capacity over the past decade and is now the largest exporter of soybeans and the second largest exporter of corn.
The port of Santos, where this is going to be, is the largest port in South America, although I believe Paranagua is responsible for more grain exports. CHS is a U.S. company based in Minnesota, but they are going to help Brazil out in any way that they can here to export more grain. And it's because CHS is here to make money. They're not here to help you necessarily.
It says U.S. Farmer Co-op, though, Joe.
Does that mean the U.S. farmer is going to profit from this? Is that what that means?
Probably not, but I'm just kind of messing around. But absolutely. I mean, any company that is what you would call multinational, people get so frustrated about, why why are renewable plants using used cooking oil? Well, because it's the cheapest oil they can get their hands on, and then that drives their margins higher. I understand people get frustrated with it. I don't think that it always makes 100% sense if we, are not, for instance, using U.S. ethanol in this SAF plant in Georgia. It bothers me. It frustrates me. But hey, these people are in the game to make money. That's all they're worried about.
When you're a publicly traded company, you care about one thing, and that's shareholder returns. They care about the stock price. That's what they are there to do.
USDA released weekly drought monitor data yesterday. The Corn Belt saw scattered rainfall with above normal temperatures last week. Drought conditions improved across portions of Indiana and Ohio, along with northeast Kentucky. Conditions worsened in Nebraska and in the western half of Missouri. The High Plains saw above normal temperatures and below normal precipitation. Drought conditions worsened in Kansas and Oklahoma. When we look at the percentage of U.S. areas experiencing drought, corn country 5%, soybeans 5%, winter wheat 40%, spring wheat 18%, and cattle country 17%.
This all looks pretty benign to me. I mean, you've got drought to the east of the Corn Belt and also to the west of the Corn Belt. You got some drought in Kansas and Oklahoma. Looking at the weather this morning, it's pretty dull. Not much going on aside from the tropical storm type stuff on the East Coast. Forecast, maybe some more rain for your neighborhood, maybe just south of you, Matt. I'm not sure, depending on how this falls. Missouri maybe catches some rain. These cooler temperatures, I think that this is a big deal.
Oh, absolutely. You got to talk about perfect grain fill weather. I mean, it's just, you couldn't ask for better grain fill weather. That map that shows some rain, anybody who catches a rain the 15th of August as well knows that they're looking at a bean crop that is still growing. I mean, these bean plants are freaking loaded with pods. I mean, everyone that I talked to, last week I was in St. Louis for a big meeting of growers all throughout the country. And I'm going to say 2/3 to 3/4 of them said they thought that they could have their biggest crop ever on both corn and beans. Then the biggest comment that I continue to hear is, hey, if I just get one more rain, it'll be the biggest bean crop I've ever seen. And so who knows? I mean, I know that talk's cheap. I know from what I'm seeing in our fields, we don't necessarily need rain. I mean, we're in pretty good shape, but you always take an August rain. August rain is not going to be friendly towards prices, in my opinion.
Matt, we have not said one nice thing about the markets today. Do you have anything nice to say about the markets?
Yes, I do. I mean, I can come up with some silver lining here. Okay, Joe, here's my thing. If something doesn't change with this fertilizer market, I think that you could see a major conversation on what corn acres are going to look like in 25. Okay. It's going to be down the road that we're going to be talking about this, but I've been looking at these balance sheets and cash flows, break evens, call them what you want. You can't come up with much black ink, if any, if you're going to look at these corn sub 450. And you're going to look at fertilizer prices that are actually higher than what they were around this time last year. I think that this fall, tonnages on dry fertilizer will be applied at the lowest levels we've seen in many, many years. I feel very confident in saying that, unless something changes. But that's something down the road that could, maybe you're looking at 87 or 8 million acres of corn. That could change the scope of discussion somewhat. It's going to take a while, though.
Well, it's not too far from now that we're going to begin to focus on other things. South American weather, planting prospects, 2025 U.S. acreage prospects, that sort of stuff. We're going to start to pivot away from this idea of big U.S. crops really during the next, call it month to 6 weeks, probably. Your fertilizer comment was a good segue to our last story here.
So strong global nitrogen prices have boosted CF Industries' profits. The company's stock rose nearly 8.5% on Thursday, its largest one-day increase since June 2022. Additionally, the company's second quarter sales and earnings exceeded expectations. Global nitrogen prices typically decline this time of year. However, natural gas restrictions in Egypt and Trinidad, as well as reduced nitrogen exports from China, have boosted prices.
CF made a lot of money in 2022. Their stock price surged. A lot of that had to do with Russia, Ukraine, and disruptions, and probably better margins. And now they've been kind of sideways. But if what you are saying is true and guys decide to really start skimping on fertilizer because it's too damn expensive, they may have some issues.
I feel confident, Joe, in that guys are going to skimp on fertilizer. Or, I've heard a lot of folks say that, I'm not going to put any fertilizer on this fall I'm still going to put fertilizer on, but I'm not putting any on this fall. I'm going to wait and kind of see what happens in the spring, because if there's a glut of fertilizer, because a lot of folks are talking about this, typically the price is going to have some sort of a reaction. So again, I'll stand by it. I feel as confident as I could possibly be that the fall run here in the U.S. on dry fertilizer is going to be the lowest we've seen in a long time.
What did cattle do yesterday?
The cattle market declined further. Feeders were down 25 cents to $2.45 lower. Live cattle were down 22 cents to $1.42 lower. Box beef has now fallen to its lowest level for the month. Choice ended the day at $3.12.12. That was down $1.73, and Select ended the day at $2.98.03. That was down 80 cents.
It would appear to me as if the cattle sell-off began last week when the equities began to sell off. So cattle kind of followed equities on the way down, but now equities have seen a big bounce and cattle continue to move lower. Has the tide turned? Are we in a bear market now?
Technically, definitely looks that way, Joe. The thing that I noticed is the exact same thing you did yesterday, is that the equities were racing yesterday and cattle could not catch a bid. No. That doesn't look good. I think everyone knows cattle on feed reports coming up are going to be bullish. I just don't think that the cattle investor right now is super motivated to get back in and buy.
It's a money flow thing for now. I mean, you got money that's exiting the market. You still got a lot of friendly fundamental stuff. I know, I think Tyson had their call earlier this week, and they said, the CEO said, there's no evidence that there's big herd rebuilding going on or anything along those lines. So it feels like a money flow thing to me. Outside markets this morning, guys, US dollar's about flat. Stocks are mixed. Bonds are up a little bit. Crude oil is up 24 cents in the September WTI at 76.43. Guys, have a great weekend. We'll talk to you on Monday.